Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, September 19th, 2018. It's about 11 o'clock Eastern as I'm starting this video. And what I wanted to do is go over some market developments in the broad market and really focus on trade ideas. So what I'll do is I probably have the lightest number of trade ideas. I'm talking long and short trade ideas, official trades on the site that I have in a long time. And that's been because although the trend has been up for the last few months here, there's just too many red flags for me to put these on as official trade ideas. If you're a gold member, as you know, if you're in the trading room, I probably put out 20 or more trade ideas easily. To every one official trade idea, I put out 20 or more unofficial in the trading room. And so what I'll do is I'll go over what I'm looking at, and as well as do an update real quick. Since we don't have a lot of official trade ideas, I'll update those. But what I'm about to do, and I said this the other day on an update, I am very close to pulling the trigger on the first swing short on QQQ in a while. And what I'll do is I'll show you why and what the targets will be. Again, so you can be prepared. Now, as I said the other day, I already think it's an objective short at this time. I am an anticipatory trader, meaning I will anticipate turns and breakouts and things that haven't even occurred yet, sometimes position, usually a partial position. That's what I've done here. So, but for official trades, I try to use those with that I have the highest degree of confidence in. So as I've been saying, we need to see a few more things happen, and we're right there today. So that's why I'm doing this video. Let's just dive into the charts. This is QQQ. There's the rising wedge, the breakdown back test. I've been talking about this ad nauseum recently. You have a little minor uptrend line right there that needs to go. But what I wanted to show you is these are the targets. If you're already short QQQ, or if I pull the trigger and add this as an official trade, these will be the official price targets right here. You can read them out, T1, T2, T3, with a potential target down here around those lows that I still think will be tested, at least tested, sometime here in the fourth quarter, which we're about to embark on. That means the last 3 months of the year. We're also heading into earnings season, as I said. We're also heading into the blackout period. Most of you know that a good part of the gains in this market over the last year or so have been driven by share buybacks. Companies like Apple with massive share repurchasing just keep pushing the price up. But as you head into earnings season, they are SEC mandates a blackout period where they can't do share buybacks, and that could lead to buybacks. I mean, some volatility. Now, again, more importantly, is that it's also aligned with the charts. I would never say that we have quarterly reports every 3 months, earnings season, I should say, every 3 months, 4 times a year. So that doesn't mean every time that we've had that we've seen the volatility. The thing I'm getting at is it aligns with what I'm seeing in the charts right now, so that could help fuel. If we start sliding real hard, Apple drops 10%, they can't come in and buy the stock to put a floor under it like they normally would if they're, of course, during their blackout period. So that's that. And there's the potential targets. Now, what have I seen today that makes me think that we're getting closer? Here's XLK. As I've been stating, XLK, which is the technology sector ETF, has been dancing on this trend line, a comparable wedge, if you will, to the one on SPY, similar to the one on QQQ, except QQQ is already broken down. So there it is. It's pretty well defined. That wedge comes off the early April lows. You can see that this minor trend line. Then you have this more significant uptrend line right here, and I think that'd be the first target if XLK breaks. But my point being that XLK is a technology sector ETF. The NASDAQ 100, which has been by far the leading index throughout the bull market, and especially since the lows back in January and February, when tech breaks, QQQ or the NASDAQ 100 breaks. There's just no arguing that. 60% weighting and very top heavy in those top tech names. And then when I look at this a 60-minute chart. Let's go here to 2-hour period chart. There it is. Here's XLK. This is that same trend line off the early April lows. You can see well-defined trend line, and we're starting to crack a little bit below it now. If I want to do what I call the benefit of the doubt trend line, I see a little reaction there, a candle that I excluded, and a tiny little candlestick tail right there, the shadow of the candle. So I can pull that down if I want to have this the benefit of the doubt trend line. I believe this is a better fit. I capture a lot more reactions. Trend line drawing, as I often say, is an art, not a science. I look for the most reactions, whether it's a candlestick body and or a shadow, and so that's a trend line. But again, you want to give it the benefit of the doubt, replicate this trend line on your own. You have to capture that low back in early April, then late April. There's a low right there, and looks like late July, and pretty much where we're at today. So an easier way to say this, if you don't want to replicate the trend line, is, if we drop much below where we're at right now, XLK is down 0.63% as I'm doing the video. So if you see XLK down another percent or so from here, that trend line will clearly be broken. And again, it's not unusual to see intraday breaks of a trend line and then to have the security snap back up and close back above there. So what you want to look for, one of two things or a combination thereof, is either an impulsive intraday break. You can short it if you see us really starting to waterfall sell off intraday, and it looks like the chances of recovery by the close are very slim, or a solid daily close, or a combination of both. So that's XLK, and again, that will certainly add to the case that we're probably in the early stages, or a correction may get going. And again, I think based on what I'm seeing in the charts, I think it would be the selling would begin to accelerate. So, if I use the term waterfall sell-off, I don't mean to be dramatic. I'm just talking where you see that quick kind of, these are waterfall sell-offs where you crack, you go down a few days. We had 60-minute trend line breaks on both of these, divergent highs on the 60-minute charts. And then you had, the selling starts to accelerate after it has become apparent and clear to all that trend has been broken. That's how technical analysis works. And stops start to get hit on the longs, the shorts start to pile in, and everything happens quick. And that's also why I love shorting stocks, because as you can see here, in just a few days or a couple weeks, you wiped out many, many months of gains, and that is often the case. So there's a point being stocks tend to fall a lot faster than they rise. So there it is. And again, the other one of the other things I was looking at, of course, was Amazon, one of the largest stocks in both the S&P 500 and the Nasdaq 100, broke down below that trend line. And again, that was the BOD trend line, the benefit of the doubt trend line. I moved it down to the lowest reactions on this. You could also have that trend line right here, but again, this is the fit that I've been using. So we broke that down, broke below that trend on Monday, back tested it, tried to recover intraday. If you look and zoom in here real close, see that intraday attempt to recover and failed, closed right back on the trend line. Today we're rejected off that trend line. We're down 1.5%. Again, in one of the world's largest companies. So pretty much we take out these recent lows. You want to be very safe. You can say that Monday's lows. Once that goes, I think it's safe to say that Amazon will start to pick up the selling. But so there it is. Check mark on Amazon, if you will. Check mark on QQQ with the back test. But XLK is on support now. You want to be a purist in trading, then go with the old mantra, support is support until unless broken. Sometimes support's defended. So a little more downside in XLK. You should have a sell signal there. And then, of course, as I always say, even though I prefer to trade the NASDAQ over the S&P 500 if I'm trading an index tracking instrument, SPY is still above trend. Here's that trend line on SPY. That goes back to this minor trend line right here. Goes back to the reaction low on June 28th. There's another reaction right here on August 15th. Several reactions here. So you have the S&P 500 still above trend, which increases the chances that a breakdown in QQQ could fail, because if SPY continues to remain above trend, QQQ could snap back above. Or you can look at it this way. This would be additional confirmation, and I think greatly increase the chance of a QQQ short playing out if we get an impulsive break and or close below that minor trend line on SPY. And if that happens, there is minor trend line here. I don't have a lot of reactions. I'm not putting a big weighting on this trend line. It may come into play 1, 2, 3 reactions so far, but I think SPY comes down to 279.80 before any reaction, and I do expect a reaction if and when it gets there. On to the trade ideas. I'll go through these in alphabetical order. If I hover on the site, I'm doing that on another monitor, go to trade ideas. And then instead of clicking on active trades long, swing trades long or short, just click on the bold lettered active swing trades. That'll show you all of them. And again, it's light as it's been in a long time. We only have a total of 8 active trades. And let me see, any of these need to be stopped now? I think they're all up to date. First one's Kane. this has been, I am just kicking myself. If you're a gold member, and you're frequent on the analysis, I posted in the trade room a couple weeks ago as we were coming up here that I was very disappointed with the performance of Kane and considering rolling that out, closing that trade early, and moving over to a different sugar track in ETN. As I said, I like to trade futures on these ETNs because versus the ETNs because they're pure. The ETNs try to track the futures, but they have higher expenses. They sometimes don't do a good job. Some are much worse than others, especially when it comes like your natural gas ETNs. And some do a decent job. Some do a very good job, actually. I've plotted the charts of coffee, JO, and coffee ETFs. But what happened is earlier in the year, not to get too far off on a tangent, Barclays, who owns the iPath series of ETNs, forever and a day I traded SGG. You can go on the site and use a drop down ticker search on the front page, and you'll see a lot of posts, a lot of trades on SGG. That was the sugar ETN, and that was my preferred trading proxy. Then earlier this year, for reasons unknown to me, I'm sure they had their reasons, Barclays did a whole revamp of all their commodity ETNs, a lot of their ETNs, and what they did is they got rid of SGG and they spun it off to GGFF, and now that trades over the counter. So pretty much they were retiring this one, but it still trades over the counter. And for that reason, and not knowing all the details, you got to read pages and pages of why they did this. They changed expense ratios. I stayed away from that, but it has vastly outperformed. And again, that's why I always in the past preferred SGG, these Barclays, over that CANE. You can see from the lows, this is a rough estimate. Lows to highs, this run was about 26%. Kane lows to highs was about from the run about what is that, 12? I go a little higher, whatever, 10, 12%. So severe underperformance. Just so you know, won't be using this in the future. And we came within the other day on the 13th. We hit a high of 735 versus my target of 737. This target would have more than been exceeded had this thing just done a half decent job of tracking. You can see the reactions right here where it was set at. And then when you look at SGGFF, and again, I'm kicking myself. This is hindsight stuff. I didn't know the performance was that bad, the underperformance of Kane. There's those same reactions, and you can see SGGFF more than exceeded my price target. So I tried to be conservative. I always set my targets below resistance. And I said this the other day in the trading room too. We're just going to have to ride out a pullback. I remain longer term bullish, but I missed that target by 2 cents again from not having a viable proxy. What they did, by the way, Barclays, this was SGGFF, which has now been moved over the counter. Trading should become thinner and thinner as time goes on. You can see the volume. Look at the volume bars down here, and this shows you that now that it's not trading on a major exchange anymore. If it's an over-the-counter security, there used to be a lot of volume. There's less and less, and that's why I stayed away from it. You don't want to go into a security that you may not be able to get out of at a good price, especially when on a low volume day. So what they did is they replaced it with SGGB. This is Barclays' replacement for SGG. It's brand new, very thin, not a lot of volume in it either. It looks bigger here, but these volume bars are relative, keep in mind. So let's see, yesterday it traded volume 15,000 shares. That's it on a 40,000, $40 price. So that's that. And also you can see again from highs to lows, it tracks better, about 18% or so. So that's that. And again, going back to Kane, I know I'm spending a lot of time on this because that ticks me off that it had such underperformance, and that I didn't just pull it early and roll into another ETN or wait for the pullback. But I do remain longer term bearish. I'm sorry, longer term bullish on this. I think the pullback will be contained here soon, probably right about here. I think it may be over actually, and we'll get another thrust up. And at this point, if you want to roll into SGGB, I think that's better off, even though it's thin and new, or trade sugar futures, symbol SB. But we'll hold this one now as long-term, ride it out, leave the stop in place, and that's it. All right, enough time spent on that. Again, normally I wouldn't spend so much time talking about any one trade, especially one that hasn't even hit a target or stopped out yet. But again, live and learn. All right, GDX looking better and better. As I said, I posted an update on the front page this morning, so I won't spend so much time on it. We had a little resistance zone here, the top of which was at 1850, popped above it today, and as is often the case after a period of consolidation pushing up against that level, you made an impulsive breakout. We're up 2.33%. Here's that downtrend line I showed in the video. This is where I expect at least an initial reaction, maybe a mild pullback here. But let me say this too. On a lot of trades, if you followed me for a while, as an active trader, you know I'll game counter trend bounces. You know, if I'm in a position, let's just say GDX, for example. I'm not doing this now. I'll game these reactions. I'll take my long, flip it real quick, reverse to a short, close a long, reverse to a short, and then on a pullback, get back in for the next leg up, and then I can magnify my gain. So if GDX over the time period goes up 20%, I might do 40, 50 if I get some of those most of those timings right. You know, pullbacks off these resistance levels. I don't care to do that in GDX. I know this, the nature of this beast. I've traded it for many, many years, hundreds, if not thousands, of trades in the mining stocks, and if all the stars and moons, the moon and the stars come into alignment here, as I think they could, we could be looking at another explosive move up in the miners. And one thing I learned about them is if you get cute during an explosive rally and try to game the pullbacks, it's going to leave you behind. You're not going to get a re-entry. So I'm content on just sitting tight right now as long as the charts continue to firm up on really gold and the US dollar or the euro. That's what I'm looking at. Obviously, they're firming up here on GDX. The next bullish event will be a break above this downtrend line right here that we're testing now, or we tested just a minute ago at the highs. First target there. And as always, I set my targets. I place them just below the actual resistance levels or the actual area I think a reaction will occur, because sometimes if everyone sees that level, you might get the seller step in early, or the market makers will mess with you and reverse it just before there, so you don't get an optimal fill. But that's what I tend to do. There's no reason to get greedy and eke out the last few pennies on a trade. I find by setting my targets just below where I think something will reverse, it greatly increases the odds of getting a fill and not reversing like we just had on Kane, for example. So there's the targets. They've been extended. As I said, you can see that update on the front page. And of course, you know, the success or failure of this trade will depend largely on what the euro US dollar does. I posted this in the trading room today, this chart showing you that we have euro US dollar pair at support with that 116,582 level. So far it's held, and I have this uptrend line here. I added it as well. So we have intersecting uptrend line and price support right there. We want to see this hold ideally. If it doesn't hold, then I think we come down here at about 116, 196. That does not negate the whole outlook. It's just going to delay a breakout in gold, or maybe we never get that breakout. And what I'm referring to is this, which is the 60-minute chart. 60-minute chart of gold futures, which I've been closely monitoring now for weeks. Again, and what stands out to me is this 1213 level was very good support back here, broken, very impulsive move down. Had a strong rally up with a brief momentum fueled overshoot of that level, but then you can see 1213 contain that level as resistance. Support once broken becomes resistance. So now, and you also have this downtrend line which comes into play as well. So this is what I want to see. I want to see an impulsive breakout above that level, and that should be bullish for gold. I'm anticipating it. I'm positioned for it in advance. We'll add to my positions if and when that happens, but that's what I'm waiting for. So we need to see the chart of the euro firm up, because that's really an inverse of the dollar. So we want to see, you know, further evidence that a top is and the dollar is in. And one way to watch that as well is, let's look at UUP. And there's the daily chart of UUP. You can draw this wedge, this rising wedge. We had a breakdown of the wedge, a little kickback rally. So really right here, this is what we need to see on UUP if you don't have a chart of the currency pairs or futures. Really a break below those recent lows in the dollar. That'll give us a next thrust down in the US dollar index, take us down at least to two of these levels here, one or more, I should say. And that should spur a nice rally and a breakout in gold. So that's what we're watching for in gold. Even though gold isn't an official trade idea, GDX is our proxy. call it a sister trade or unofficial trade idea or whatever you want there. So that's what I'm looking for. IEF, I'll hit on it quickly. IEF, we've been in for a while. This is a steady eddy. This is part of asset allocation. This isn't a get rich quick trade. These are intermediate term U.S. Treasury bonds. Fewer things that we trade on the right side of the chart are more secure and safe than government bonds. It's an income producing idea and also asset allocation. If we get a stock market correction, which I think we will, that'll probably give us a flight to safety in bonds. As of now, we've collected, since we entered this trade back in February, we've collected a total of, somewhere it is here, cumulative dividends, $1.32 in dividends. That brings our cost basis down to about just under 101. So we're about break even on it. It's 101.84. Cost basis is 101.98. And again, if you look at it another way, I could have added those dividends to our entry price right here of 102.30. Which would have brought us as high as, it would have already hit T1 if you did it that way. I'm just reducing basis using that math. But either way, I still like it. I want to mention this one more so as a sister trade. TLT is a sister trade to it. Very good support right here. Look at all these levels down here. TLT is at the bottom of this trading range. I've got to get rid of those volume bars that I highlighted earlier for you. That kind of takes away from the picture here, and I'll move prices a little higher. All right, so this is bonds. I know a lot of you aren't interested in government bonds, that's fine. But again, some of you might be as a way to get income in your portfolio, safety, diversity. Big level there. But when I look at the weekly chart, and I posted this in the trading room yesterday, you look at TLT, there's actually support. It's a support zone from about 116.50 down to 115. This lower line here, you have reactions right there at the low end of the support zone. So you also have this potential divergence, just like you had negative divergence here, which preceded that big drop. You have bullish divergence right now. Indicators are pointing lower. We need to reverse. So what I can see here is a little washout move. And in fact, I favor it. When you come this close to support, we've been tapping on it. Go ahead, TLT, break down, flush out a bunch of longs, bring in some shorts. It'll set up a nice potential for a bear trap pattern. Come down here, put in a divergent low, which we already have divergence, but it will just simply extend the current divergence, and then boom, give us a rally up to the top of this channel, or at least a back test of this trend line here that was broken, or both, and probably be both, something like this. So again, this is a way to diversify. And again, this would also align with, it doesn't have to happen, but if we do get a correction coming up in the third quarter, or as we're about to head into the fourth quarter, we get a decent correction in the stock market, most likely you'd see money move into government bonds as a flight to safety, and then that should push TLT up. So there's TLT, and IEF is just going to track TLT for the most part. It just has a little less volatility because the duration on the bonds are shorter, lower duration on the bonds. All right, next one up would be KHC. Nothing much to really report. Well, this one already hit our first target early on, and it's fallen back down. It's testing, getting close to the stop. I don't see a lot in the chart right now to convince me. I'm certainly not going to extend that stop. You do what you want, but I'm not crazy about it. It is support. You could take a shot here if you don't own this one, if you're bullish on the markets or on this particular stock. Some stocks can go up if the market falls, but I don't see enough to make me go long if I weren't already long in this one. So I'm just going to leave it be, leave the stop in place, and I'll update if anything significant happens, but I'm just not crazy about that chart right now. PPLT, call it a sister trade to GDX if you want. This one is an official trade. We took it here recently, I think on the breakout here above this resistance level. So it's moving up nice, nothing big yet. Needs to take out this downtrend line. In that case that I made in gold, in the US dollar, and the euro, once that firms up, if it firms up, then this one's going to go together. The precious metals, platinum, palladium, gold, silver, they all tend to move together. Yes, some lead and some lag, but for the most part, the trends are in synchronicity. So there's our first target. Second target, looking good. Will look better if that level's taken out. Will look better if the case on gold and the euro and the dollar firms up. I expect a reaction there. The actual resistance levels at 80.28. I have the target set at 80.22. If and when we punch above there, next target, and then I'll decide whether to extend the trade or not. But as of now, I plan that to be the final swing trade. There's platinum. And again, precious metals are just another way to diversify a portfolio. If you're top heavy in stocks and you want to look, where do you make money during the next correction or during the next bear market, or even right now, even if your stocks are doing well, you want to let them ride, but you don't want everything there. You want a well-balanced portfolio, precious metals, bonds, select commodities, ag commodities like sugar, things like that. Shop would be no, SAFM. Uh, not much to say on this. I don't have much of an opinion right here. I still like it longer term, especially if the market holds up. We broke out. We hit the first target pretty quickly. We pulled back. I like the fact this PPO is above the zero line, curling back up. If you're new to my analysis, I often use this as a trend indicator, and I'm referring to the 9 EMA, the signal line on the PPO. PPO is a cousin to the MACD. You have the zero line in the middle, and that does a good job at finding trends on stocks. When that 9 EMA crosses down below, the trend is bearish, and sometimes, quite often, that line will act as support and resistance when tested. So this kept the trend bearish. Boom, finally here we had a bullish breakout. It coincided with a breakout above this falling wedge, which is, I believe, where we took the trade. That would have been the catalyst for this trade, and that tells us now bullish trend. And so ideally, we're testing now, back testing. We hold support there on the PPO signal line, and we get our next thrust up to T2 and eventually to T3. If not, they stop us out. That's it. That's trading's all about. Just move on to the next one. If the charts look good, I'll keep it on my radar. If not, it just goes to the wayside, and I'll revisit that stock the next time I see a bullish or bearish setup, whether it takes 2 weeks or 2 years. All right, finally, last one as far as official trade ideas go. Uh, oh no, I forgot. I have shop. Shopify pushing the limits of our stop. I'll tell you, this is going to be painful. I'm going to leave the stop as is. You guys do what you want. Stop is still on a daily close above 165. It punched above their intraday today, but failed to take it out. But what we have, not only it's testing that stop, which was placed somewhat strategically. Stops are always calculated in line with the risk reward ratio to the targets, at least to the final target. But I also strategically try to place them around support and resistance. This is a resistance level there as well. It might be a little tight to that resistance, I will say that. So there's nothing wrong. You want to give it a couple more points on there. And it's also, as you can see, the stock broke down. And this is a long-term trend line. This trend line goes back all the way to early 2016. So it's a well-defined trend line, which gives it a lot of, it validates that trend line, a lot of reactions on it. And we're simply back testing it now. So I think we'll roll over. I think this trade still looks good, but this stock moves quite a bit. It's a tech stock, software technology, software application. So it's a tech stock. And, the thing about trading, you can't let your losses run. You just have to cut them at some point. And as you guys know, if you followed me for a while, I have no idea coming right back in on a trade. This is our third trade in the last few months on GDX. I think second or third official trade. The last two, I think one of them hit the first target, if I'm not mistaken. One was stopped out without hitting a target. That doesn't deter me. If the charts look good, I'll keep coming at a trade like a pit bull as long as the charts look good. It's not out of stubbornness. It's not that I'm trying to get my money back. Sometimes I'm a little too early. And then there's others, I get stopped out. I move on. The charts don't look good. That's it. I just move on to the next one. So I wanted to mention that. And I also want to mention that in this context, that if I'm stopped out on shop, we can always re-enter the trade. If it just pops above there and then falls back, we get a pretty impulsive rejection off that trend line. Maybe it wants to make a marginal new high like this, extend these negative divergences right here with a little pop up. There's a myriad of possibilities, but and that's certainly one of them right there. So therefore, if they take it from us, we can re-enter. And if you want to extend your stops, if you're in it, so be it. SRS, this one's moving up so far. It broke out of this bullish falling wedge. It's moving up, but if you really zoom in here, you can see if I put a line right about here, look at the crosshairs, look at the horizontal line right here around 2730. A lot of reactions there. So it really needs to pop above the high here from Monday, which was about 2730, we'll call it. If that happens, I think we'll get a pretty swift run up there to the first target. This is leveraged, so sometimes it doesn't track perfectly. SRS I'm referring to, but here's IYR, the REIT ETF. Same story in reverse, and this is the non-leveraged one that tracks the same sector, and it has broken down. So, I think before all said and done, IYR comes down to right here. That's 3.62, double that roughly for SRS. So you're looking at about a 7% gain in SRS. I think that should align with my target. Let's see. And again, that's from where we're at. We're already profitable on this trade. I have a potential third target up there, but right here, yeah, no, actually takes me up to about, I might have to modify these targets. Again, I'll keep an eye on the charts of IYR. Sometimes I make minor adjustments to the price targets, but those are the targets for SRS right now. And that's it, guys. Long video, but I've got in everything I wanted to cover. The very few trade ideas that we have officially right now. As always, I put a lot of unofficial trade ideas out there. If you're a gold member, part of that service is you can ask me your opinion on any stock, whether it's your own position and your own trade setup, or any of the official trade ideas. If I haven't updated them, just drop me a line in the trading room. That's preferential because if you do a private message or email, other traders might have or investors might have the same question. So I prefer just drop a line in the trading room. That way I put up a chart and everyone can see that and decide if they want to act on it. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.